very, very important. Something that probably affects every one of us, one way or the other. And our spotlight this morning is on a major move by the Bank of Ghana, and it's the fact that the Bank of Ghana is cracking down on authorized forex transactions. And it's a directive that has already stirred some conversations across boardrooms and living rooms alike. Businesses are wondering how it will affect contracts, pricing, and payments. Ordinary Ghanaians are asking what exactly it means for school fees, rent, and travel. And also at the macro level, the big question is whether this step will finally stabilize the city or simply create some new pressures. And this one will unpack it all. We're asking what the directive really says, why the central bank believes now is the time, the implications for businesses and consumers, and of course, how enforcement will play out in our cash-driven economy. And most importantly, we'll discuss the way forward, the risks, the opportunities, and the lessons that we can take from elsewhere. So let's dive right into it. My guest this morning is Dennis Brown. He's an associate director of strategy and transactions at Deloitte, and he joins me for this conversation. Dennis, good morning.
Yeah, good morning.
How are you
Can you
doing?
hear me? Good morning. Yeah, Trevi, can you hear me?
Yeah, Trebi. Yeah, good. Yeah, I can hear you. Can you
Trevi.
hear me too?
Yes, I can.
All right, great. Good to have you this morning for this all important conversation. I hope everything is fine.
Yes, we are grateful to God.
All right, great. All right, so we're talking about the crackdown on unauthorized foreign transactions, and let's get into it. Maybe let's begin with some clarity. Maybe can you break down um, this directive in simple terms for us? What exactly the Bank of Ghana is saying business and individuals can or cannot do with forex?
Yeah, I think in the past couple of weeks, we've seen two directives from Bank of Ghana.
Hmm.
The first one had to do with large corporates that rely on the banking system for their FX needs. And the directive was quite clear that the banking system should prioritize those corporates that have previously funded accounts with foreign exchange, right? Which is to say that Bank of Ghana is recognizing that these large corporates, they, by the nature of their business, deal in forex, so they typically sell and realize their info in FX. And therefore, to be fair, they ought to have a way of funding accounts, FS accounts here, right, with deposits of FX, so that as and when they need FX, the system can also, support them. And I think it's logical because you can't run a system and expect to sustain that system whereby the cycle is such that the businesses only, out from the system to support their FX needs.
Hmm.
And then when they make sales and realizes the inflows, it somehow doesn't come back into the system obviously will collapse.
Hmm.
We allow that to continue. So the logic, I must believe, or I believe, from Bank of Ghana would be that look, if you want the system to support you, you first also have to support the system. If you export your gold and other, um, services, export services outside, and realize the inflows, it should find its way back into the banking system so that you know there's a funding account from which or on the back of which when you need FX to transact business to follow the business cycle, you'll be able to, the system will be able to provide that. Then subsequently, they also issued a direct asking that, but this second directive, which I think this discussion is centered on, is not new.
Hmm.
Asking that businesses and individuals that are operating in Ghana desist from pricing their services in FX, except where those services or goods are being provided to foreign clients, right?
Hmm.
So, but if they are being provided to residents, to the extent that our functional currency is Ghana cedis. You don't want to have a situation where now individuals and businesses that earn in Ghana cedis will now go out there chasing dollars by converting their Ghana cedis into dollars holding them up to fund transactions in USD, which really ought not to be originally from the FX Act. I think in the last couple of years, maybe like 2 years ago, Bank of Ghana came out with a similar directive. So this one is just, a confirmation that look, that directive that we came out with like 2 years ago, it seems people are beginning to divert from that. We want to remind you that it is a core part of the FS Act
Mm.
and rules that you ought to abide by. So it's more of a reminder. It's not a new thing. Some
Mm.
time ago, 2 years ago, they came out with a directive asking that so far as you're providing services to residents locally, those services or goods should not be priced in USD. The only time you are allowed to price in USD if you are exporting your services. So you are basically providing goods or services to a foreign client who then
Mm.
would have to pay in USD, etc.
Right.
So it's not new at all. And it's quite prudent if you look at the impact that Bank of Ghana is looking at. Because if we allow to be the norm, what you'd find is that you and I, we earn our salaries in Ghana cities. We have kids to pay their school fees or feed them, and yet we'll be more worried about, protecting our pairs because the fees are in USD, and we are in a system that battles, perennial exchange rate issues or depreciation. So what would be tempted to do would be to now go to the forex bureaus, convert our Ghana cedis into dollars, pull them up, even for transactions that are like 3 months ahead, because we know we have to pay our rent and our
Mm.
schools in USD. That then creates a situation where you have artificial demand just outpacing supply because artificial demand because I don't need it now, but I'm looking 3 months ahead that the CD may depreciate. So I convert and hold up to pay my mortgages in dollars, to pay my rent in dollars, to pay my kids' school fees in dollars, if all these things are in dollars. So you create artificial excess demand. Whenever demand outweighs supply, you see the exchange rate going up and the CD weakening. The CD weakening also have other economic consequences, particularly relating to inflation, right? Because
Mm.
there are other people that even needs it immediately and genuinely for their business who then have to get it at a higher rate. And if they get it at a higher rate, it means there will be increase in cost of their input for whatever services that they are providing or whatever that they are putting out there, which will eventually come back to us in terms of, in the form of increased prices.
Mm.
That's inflation, which weakens our purchasing power. So Bank of Ghana has considered all of this. They know that if you don't curtail these things, it has this dire impact on our purchasing power, not only on businesses but on individuals as well. And so it's in an attempt to deal with that that they've
Mm.
issued a reminder out there that look, you operate in Ghana. In Ghana, a lot of the consumers, or I mean, the consumers traditionally earn their income in cities, and they would have to spend in cities to maintain some stability.
Mm.
And aside maybe the exceptions noted, where you're supplying services to a foreign client who also earns their income in foreign currency, so will pay for your services in foreign currency. Whatever we do locally, the services that we provide to local consumers and we produce locally here should be priced in USD. I should be priced in Ghana cedis and not USD. I
Mm.
think it's a step in the right direction.
Right. But the big question is that why now? What has changed in our market that makes this crackdown urgent at this point?
Well, like I said, this particular one is not new.
Mm.
It's been there for like 2 years or so. In fact, it's been in it was subtly in our Foreign Exchange Act. Okay, but what Bank of Ghana did like 2 years ago was to, bring it out a bit more clearly, right? In a
Yeah.
similar directive they issued out there, asking people specifically what to do and what not to do,
Mm.
and it revolved around the same, issues. That look, you cannot be a school functioning in Ghana, or operating in Ghana, and be issuing bills to parents indexed in dollars.
Okay.
You know, be a company producing and selling in Ghana and pricing in dollars, whatever your reason will be, rational or not, you know. And that is their mandate because there's no system that runs purely as 100% free market, economy where you leave everything on an autopilot per se, right?
Yeah.
Bank of Ghana every now and then will step in, see where the excesses are. If things are spiraling out of control, they will issue their directive. Normally, the directive will be in line with a certain, bigger legislation or act, that look, they are reminding you that the act doesn't allow you to do this. If you don't understand those particular provisions, we are telling you specifically this is what it is. So you have to desist from it. So, businesses and individuals, I mean, those that play in that FX space, they know it, they are aware of it, but, humans are rational beings. They typically will do what they think protects their resources. And so you find people flouting the rules.
The rules. Mm.
It's not new. It's not new.
I
It's
see.
just a reminder from Bank of
Okay.
Ghana that we are not allowed to do this. So stick to the rules.
Yeah. Right. So let's look at the implications. You talk about the fact that it's going to affect business as well as individuals. Now, for businesses, I think this is where things get a bit tricky. Which sectors do you think will feel the immediate pinch? I am thinking of real estate, importers, travel, and all of that. What do you think?
Yeah. So when you take a sector like real estate, I see the challenge because their cost of input is mostly indexed in dollars because then they are importing materials or the materials that they use in for the construction or
Yeah.
developing the real estate are mostly or large parts of it are imported. They would like to index their um, the prices in dollars to create an inherent hedge. And this is one of the things I talked about as being a rational being. So the rational businessman are thinking of dollar cost and trying to create a hedge by pricing in dollars, which is fair. But what Bank of Ghana is saying is that to the extent that your products are being sold to Ghanaian, consumers or residents that are earning their due in cities, you would have to price in cities. So what then happens is that you look at the current market situation, right? And then of course, nothing prevents you from doing your own conversions in terms of the cost that you've incurred in dollars and converting it into cedis and building that into your price, right? But what Bank of Ghana is asking for you to desist from is do not raise an invoice and indicate dollars in there for your customer to pay. So you can look at the current exchange rate and say, look, currently this is what the exchange rate is telling me that my cost is. So if I'm putting a certain margin on it, this is what my price should be in Ghana cities. The way the side businesses can manage, I see the risks is that you price at a point and then you never know what will happen over like a month or two because for real estate, for instance, people don't just pay immediately because you gave them an invoice. Sometimes, more often than not, they pay over time. Even those that are paying at the shortest possible time pay over 6 months, etc. And in 6 months, there's so much that can happen. We understand, but they can build in certain provisions in their contract to manage those risks because you're looking at your cost in dollars and you're worried that if you give the customer 6 months to pay, by third month, maybe things would have gone southwards in terms of the exchange rate so much so that it eats away the profit you have on the price you profit built into the price you quoted to the customer. So you can have ways of managing that risk by putting in certain provisions in their contract. For instance, letting the customer know that this price is for today. If you're able to pay within the month, it's okay. But if it goes beyond maybe 2 months, 3 months, you would have to relook at the price again. You understand? So that if you also want a payment term for 6 months, they might have even built up some margins, right, to account for losses that may arise as a result of movement in exchange rate. So that if you are paying within a month, for instance, you pay what you have been quoted. But if it extends beyond 2 months, there's some maybe interest component or some other margin. You can choose a name to call it to then absorb whatever losses that may result as a result of exchange rate movements
Mm.
for that period. So they can have their own innovative ways to manage that risk, but we can't say because of the nature of business transactions in that sector, we will relax the rules for everyone. And it can also be very cumbersome if Bank of Ghana, decides to be overly targeted. Let's say they now select real estate. They get their materials, they import their materials mostly in USD, so let's exempt them. All manner of sectors can also come up with, evidences that suggest that they should be, excluded.
Excluded.
Meanwhile,
Mm.
some of these materials, you even get them locally, but perhaps they think it's more efficient for them to import them, and maybe there are also quality issues. Those are business considerations. Bank of Ghana is just there to ensure that the rules are, maintained. So while sectors like FX may feel the pinch, I think it's the responsibility of the business managers in that sectors to see how they can introduce measures to manage the risk.
Mm.
The bigger picture is what the benefit is for all of us, taking it as a whole, as an economy, right? So
Yeah.
that we are not serving the interest of only just a particular segment, but we are doing what the economists will say what is in the interest of the greater good.
Mm. I see. So we are going to see some things in there. Should businesses be preparing in the short term for some price adjustments, contract renegotiations, or some invoicing headaches at this time?
Yes, of course. I mean, it depends on how you've configured your business currently. So if you're a school, maybe an international school, and you've always, invoice parents in USD, so you would have quoted the USD figure. Typically, you allow parents to pay in Ghana cedi. So at the prevailing rate. So maybe at the time that they are paying, let them know what the rate is and then they pay in Ghana cedis. What Bank of Ghana is now saying is that you are not supposed to do that in the first place. So if your system has been configured, maybe you have like an accounting system or a software that have been configured to be issuing the bills in um, USD, you would have to reconfigure it to reflect cities. That's to start with. So you need to adjust your systems to reflect exactly how Bank of Ghana, is directing that you do.
Mm.
Now, as to whether that means actual price adjustments, I don't think it's in the immediate sense, right? Because if you have your USD price,
Mm.
in the now terms, it's just a case of converting at the prevailing exchange rate and asking parents or customers, if you are not talking about educational institutions, to pay. But going forward, there will be the need to look at some price adjustment, because typically what the USD had done, because it's a better store of value, it allows them to keep to a certain price quote for maybe several months.
Mm. Yeah.
The risk of additional cost is just pushed to your customers or parents in this example that we are giving. Right,
Mm.
the school has a USD quote. For them, if the exchange rate drops or goes up, they feel they've hedged nicely, and it's for parents to then pay at the prevailing rate.
Mm.
But once that is reconfigured to Ghana cedis, it means that the school now begins to take that risk, unless the school is able to convince the parents that on monthly basis they'll be issuing them with new
New
bills,
bills. Mm.
which is not efficient. It's not effective. Parents will not tolerate that. They will just want to know what the school fees is for the child and to pay. So I guess it's more likely that risk will be absorbed by businesses, as they face customers. Because customers will need to play with at least a stable price for a certain period of time to be able to plan, etc. So when that happens, the businesses will absorb the risk, of let's say movement in exchange rate that will occasion increased cost, etc. But like I said, I'm saying they can then, be smart enough to build in some margins to absorb like expected cost increases as a result of FX risk,
Mm.
but and still quote in Ghana. So yes, there will be the need to adjust prices to account for cost, but that would be like maybe months ahead, not immediately, because as we see, the exchange rate have been fairly stable, and so if they have to just reconfigure and quote in Ghana cedis, it is for their customers to pay what the rate, the equivalent of what the rate is now. But
Mm.
going forward, then you are worried about whether that price, is sustainable going forward, especially if the cost that you incur is significantly in USD and the city starts appreciating, then you might have to, put in some margins to absorb the risk.
Mm. And more so because we've seen in just about 3 days, I think 27th towards 29th of last month, we see that city depreciates, I mean, in a very sharp manner. So if
Mm.
somebody is running a business and they've priced their things in cities, then they may want to change it real quickly, and then when it drops, you have to go back. So I see a back and forth there. We're going to talk about the implications for individuals very soon, consumers largely. But let me just announce our phone number, phone line, so that anybody who wants to get into, call us and all of that will be able to do that. So please, you can call us on 054432 1019 0544321019. You can send a WhatsApp to that same number 0544321019. You can as well call me on 03039 if you, feel free to share your thoughts with us this morning right here on the Business Breakfast on Z. We're streaming live on Facebook at ZFMGH. You can send us a comment and then I'll read them for you. We're also streaming live on YouTube at Z Multimedia. Please do well to engage us. So this morning we're talking to Dennis Brown. If you just tune in, we're talking about the crackdown on Forex, unauthorized Forex transactions by the Bank of Ghana. And so that is what we're having a discussion on this morning. And he's talked about the implications on businesses already. Now we turn to consumers, really. We want to focus on consumers for the next few minutes. Then we look at some other parts of the conversation. So, Dennis, of course, it's not just the corporates. For the ordinary Ghanaian parents paying school fees abroad, or the tenant whose landlord insists on dollars, how would this affect their daily lives?
Yes, so two different scenarios you've provided over there. For those who are paying for fees abroad, they nothing will change for them because the school abroad is not under Bank of Ghana's regulation, right? So they will bill you in dollars as they should, because it's probably the functional currency with which they transact business with over there.
Mm.
Course, and then you would have to find a way to get the dollars to pay. So that is not, under the ambit of Bank of Ghana. It is
Okay.
not like this directive.
Mm.
They rent from a local landlord here, but what Bank of Ghana is saying is that originally you are not supposed to even charge the rent in dollars. You're supposed to charge the rent in
In
cedis
CDs. Mm.
because the property is in Ghana and it's rented out to a Ghanaian. If it's rented out to a foreigner, let's say an expatriate, right?
Yeah.
And yes, the expatriate is being, the expatriate, the source of income for the expatriate, of course, is it's from foreign sources, right? So maybe an expatriate who's here to work for a short-term business, he earns his salary from work that he does, over there abroad, and
Mm.
he's here on a short-term basis. You can bill them in dollars. That's what Bank of Ghana is saying, you know. But if it's a local resident here, you cannot bill them in dollars. What that does is actually to have a positive impact on the purchasing power of the consumer. In this case, like not immediately, but in terms of going forward, because typically rent is agreed on. right?
Yeah.
Even though in terms of payment, it might flow out monthly. In terms of what has been agreed for you to pay, normally, it may have been agreed for a period like 1 year or 2 years, right? Sometimes more.
Hmm.
So in this case, those rent contracts, I imagine, will work more in the favor of the consumer. At least in Ghana city terms, it helps them plan, especially because they are earning in cities, right? So if
Yeah.
you're a salaried worker, for instance, you know how much you earn in cities. And so if you are told that your rent is 1,000 cedis monthly, you know what you're going to earn at least for the next 12 months until maybe a salary review is done. So you can plan, better than if it was in USD and you are standing at this point in time and you are told that your rent is, let's say, $100, and at the time of conversion, that $100 is 1,000 cedis. The next month, the CD depreciates and it's now 1,002. You don't know what it will be the next 3 months. Or,
Hmm.
so that's the situation you are dealing with. And do you have to then be constantly adjusting your budget or adjusting other things to fit into that budget? It makes it very cumbersome. Aside just, reducing your purchasing power overall because of the depreciation, it makes it very cumbersome, to deal with. Now, so when you flip it, it's it's stable. It's in Ghana cedis, and for the next 1 year or so, this is the rate you are paying, and your salary, it may also be fixed. I mean, aside, of course, self-employed who are running their own businesses, they don't have constant salary, so they may be earning more or less, and managing the rate related to it.
Hmm.
But for simplicity, if we use a salaried worker as an example, right, which most of us are, of course, there's a certain amount that you are earning that you are sure of will be there for the next 12 months. And so you'd prefer for your, cost to be stable. And
Hmm.
that's why when exchange rate is galloping every month, people complain a lot, you know. But if we can keep it stable, then they can draw their budgets around it, you know, and operate quickly within those. But so largely, it is expected to have a positive impact on consumers, especially local consumers. Okay, that is all things being equal. When you say that, I mean, as an economist, you have to introduce a ceteris paribus, because also things can go in the opposite direction where the consumers will now wish the thing was in dollars. For instance, over the first 6 months in this year, where we
Yeah.
saw significant appreciation of the CD,
Yeah.
of the CD against the dollar. If your rent was in dollars, okay, you'll be enjoying because every month you pay lower. The thing,
Hmm.
every month you pay lower in CD terms. So, but though that kind of situation has been rare.
Yeah. The probability that it will happen is very low.
Yes, the probability that will happen is very low. So, in the grand scheme of things, I would expect that this directive will rather work in favor of consumers.
Hmm. All right. I see. So in this time, so we can say that the businesses are those who suffer most, isn't it?
I mean, yes, but for the greater good, you see, for the greater, within the short term, they will feel the pinch. But
Right.
within the medium to long term, they will realize the benefit, because it's an ecosystem we are dealing with here.
Hmm.
It's an ecosystem we are dealing. We need a system to function properly, and for the system to now support us. We cannot depend on a sick system.
True.
If the system itself is sick, you can't depend on it. It will only show that you for a while before everything collapses, including you. When the system collapses, you automatically collapse.
Hmm.
And when you find a way to sustain the system, when you are collapsing, the system will support you.
Right.
So we have to look at the greater good, because if Bank of Ghana doesn't deal with that, then you create a situation where individual, like I indicated earlier, individuals go out there chasing, they give their salary and they go out there chasing dollars to come and keep it, because they see about 50% of the things that they have to spend on will be priced in dollars. And
Hmm.
as rational beings, you want to protect yourself, especially knowing that you operate in an economy that experiences perennial exchange rate issues. So you simply want to protect it. So you go out there and chase dollars. As you go out there and chase dollars, you create excessive artificial demand, and that then whatever you feared, for which reason you are going out there to take the dollars, your very action actually occasions that,
Right.
because you feel like the city will depreciate. So you are going to get dollars to protect you, when you are making payments for your USD transactions. But the more you go for it, even at a time that you are not ready for it, but just to store it, to cover expenses that are further down the line, maybe 3 months, 6 months, you create excessive demand within the short term. And whatever you feared, which is the exchange rate, now begins to play out because more demand chasing fewer dollars. So the price will go up. And as the price goes up, then you feel the urge to even go out more because you feel, it has started again or it's going down. And more you do it, the more it goes. So if you're not careful, it can create a very vicious cycle, with no immediate end in sight. It can
Right.
create a very vicious cycle with no immediate end in sight, where the city will be depreciating for several months, further down the line, and a lot of it would have been fueled by speculation because the thing started depreciating at some point, and businesses and individuals alike are going out there to store what they store because they don't know, what will happen in the next 3 months, next 6 months. They just predict that the way it's going, it will just go down further. And the more they pursue in that action, the more it rather
It
fuels,
goes down.
you know, that cycle of depreciation, which is what Bank of Ghana is trying to deal with.
Okay. So are we saying that this directive could make the CD stronger in our hands? Is that what we are saying?
Yes, it will definitely make the city stronger in our hands. And if businesses are going to feel the pinch now because maybe it now becomes a bit more stringent in terms of obtaining USD, the medium to longer term impact is that they are going to benefit as businesses because, mind you, if that cycle is allowed to continue, you're going to face an increase in FX rate, right? Which is going to translate into higher cost of input because you are going for the dollars to go and buy or import whatever it is that you want to come and feed into a production process or to sell here, right? So if we create a situation where getting it higher exchange rate, then of course it fits into your cost of input, which will make your products more expensive. And we are in a price sensitive market anyway. I don't think any business man is looking to have its prices, increase every month. They know it affects demand,
Yeah.
and so they won't be happy. For those that are also operating the export market, if you get the dollars at a higher rate here, your products will also land there at a higher price. And meanwhile, over there, you are competing with products from other markets. It could be Nigeria, it could be South Africa, it could be Ivory Coast, it could be Kenya. You're all playing the same international market. So
Yeah.
it's not as if you own a certain monopoly. If your goods becomes more expensive, unless you are saved by some superior quality, considerations, which may not be the same, typically not be the case, you are going to also experience, a reduced demand, which businesses don't like. So businesses are also very much aware that they rather operate within a system where the exchange rates are stable, they are very predictable, they can plan, they can allow for them to produce and for their products to land in the market at a reasonable price so they can sell to recover their investments. You don't want your investments to be, stuck in your production or in your value chain for so long, you know. So medium to long term, it has positive impact for businesses as well. So that's what I'm looking at it as entirely as the ecosystem, right? Individuals are there, businesses are there. It has to be friendly to consumers, which it will be immediately. But in the medium to long term, it will also be friendly to business. It will have a positive impact on their business, and so
Okay.
all benefits. Yeah.
All right. All right. So let's zoom out a bit. How does this move fit into the Bank of Ghana's broader fight to stabilize the cedi and manage inflation?
Yes, it's squarely at the heart of it. It's squarely at the heart of it. I mean, that's like a very core mandate for Bank of Ghana. So when you see any directive, most likely it's going to concern these things, on the monetary side, inflation, exchange rates, strengthening the CD, etc. That is what they are mandated to do. So it's squarely at the heart of it. And I think some of the explanations may have already come out in what I had said, initially, that it can create a very vicious cycle of exchange rate increases with no immediate sight, like, no immediate end in sight, sorry, right?
Yeah.
One thing leads to the other, and then it leads to the other as to depreciate the edge for businesses and individuals to want to get what is currently available out there and store it, increases, and
Right.
then that further fuel, depreciation, and it keeps going like that. It can be a very dangerous situation to be in. Why? Because largely as it is now, we are an import dependent economy. Okay,
Yeah.
we are trying to change the structure of our economy. And we've had various economic transformation programs. The most recent one, which just about kicked off, is the 24-hour economy program, which clearly is intended to transform the economy, right? Make it more one that is more export driven and more self-dependent than what we have now currently, which is largely import dependent. But currently, this is not something that will happen overnight. So within the next year, 2 years, we are still going to be largely import dependent. And that is why taking care of the exchange rate and the strength of the local currency is very, very important, super important. Why? Because a lot of business actors will depend on, inputs, you know, as has been the case traditionally. And therefore, you depend on dollars to do your businesses. And if we don't check, then it's going to translate into higher cost, which is going to then come back in terms of in the form of higher prices, for the goods and
Yeah.
services that we buy, and
Right.
that's primarily inflation. So the Bank of Ghana comes up with this directive that the bigger picture they are looking out there, they are looking for out there is inflation to be able to preserve the purchasing power of consumers. Okay,
Okay.
inflation itself has other consequences. For example, it constricts business growth. When businesses are having to deal with increasing every now and then, it constricts the extent to which they can expand.
Right.
And if businesses cannot expand, they cannot create employment. And we have a huge unemployment situation to deal with as well. So now you see how that even connects to the fiscal side of things. We've come from the monetary, but these things go in tandem. So it has impact on the fiscal side in terms of how it constricts business growth, and therefore businesses are create employment, which is one of the key things we are looking at addressing. It's one of the key challenges we have in our economy. Okay. And overall, negative impact on productivity of the economy as well. If businesses cannot grow as much as they ought to, then of course the economy is the economy is made up of the combination of all the businesses and other economic actors. So once your a business's productivity is impacted by that, eventually it will translate into that for the economy as a whole. Okay.
Right.
So
But
clearly, what that directive is at the heart
it's at the heart of
its mandate,
their
which is
mandate.
dealing
Okay.
inflation and maintaining a strong local currency.
But do you see it boosting investor confidence, or could it send a wrong signal that maybe Ghana is a riskier place to do business right now? Because I tend to look at it like that as well.
Mm, I mean, so that one is a bit tricky, particularly in the short term. So in the short term, it creates the impression as though Bank of Ghana is being too stringent, right?
Yeah.
So investors would think of it as Bank of Ghana is being too stringent. People need dollars, businesses need dollars to go about their businesses. You shouldn't be that strict. That is likely to adversely affect investor confidence in
Yeah.
the short term. But I think that is a risk that can be dealt with effectively by communication and engagement. And Bank of Ghana should consider that, especially within the short term. So not just put out a directive out there and expect that everybody will be happy with it. Of course, there are people that need dollars now, and it comes to hit them, shockingly, because the conditions that have been, you know, laid down now, they may not be prepared for it. They have to adjust before, so it may create some delays, etc. And of course, the misgivings will be there. But like I said, it's for the greater good. So, Bank of Ghana should take additional steps to engage key stakeholders, right? To engage the key stakeholders, let them understand what they are doing. It's not just a directive, but connect it to how that will support the ecosystem, and by so doing, how that ecosystem can be sustained to support us, both individuals and businesses.
Mm.
Yeah, because I mean, it's just like life. In everything, you go through some pain before
Yeah.
the sweet moments come.
Of course.
Sweet on her. So we business would have to take the pinch within the short term. They would need to, you need to talk to them, engage them a bit more, let them understand the strategy, what you are seeing out there. Because sometimes a single business doesn't see as much data as Bank of Ghana sees.
Mm.
Bank of Ghana, they can see what's going to happen in the next 3 months. That may put you businesses in a very tight corner.
Yeah.
Very, very tight corner. So sometimes they come up with some of these direct to even prevent it. But because you are not aware, you are thinking as a single business, I dollars at this time, a Bank of Ghana is making things difficult for me.
Mm.
So, your confidence may be, shaking a bit. But like I'm saying, this is something Bank of Ghana can deal with by engaging stakeholders, letting them understand that, look, this is why we are doing what we are doing. Because if we don't, in the next 3 months, you probably will not like the position that you will be
Will
in.
be in.
If you go out there and there's no dollars, we're going to try this best to see how we can preserve those same dollars for you. So, it's just a stakeholder engagement, a lot of it, for them to understand what Bank of Ghana is doing so they can support. And I think that will effectively, deal with
Mm.
that challenge of investor confidence. In the medium to long term, if the system is proving to be, very solid now and is able to adequately support businesses' needs for FX, their confidence will come back again in multiple quotes.
Right. Okay. Um, Dennis, are you still with me?
Yeah, I'm with
Okay,
you.
great. All right. Yeah. So are there some lessons from other African economies that we can learn from? Maybe countries that have tried something similar that similar to what we are trying to do, the restrictions. What
Yeah.
worked there and what backfired? If you have any idea
Yeah.
like that, because in recent times I've seen the former president of South Africa, Jacob Zuma, actually call for de-dollarization and all of that. And earlier this year, I think when Donald Trump won the election, one of the concerns that one of the things that was actually going on before he won the election was that BRICS was trying to come up with some sort of, new currency to do away with dollar. And then he threatened that he was going to give 100% tariffs, place 100% tariffs on every country and all of that. So there's been a lot of conversations, but I want to know what exactly has happened in other African countries.
Yeah, the time was short. I tried to dig that up to see what if there are any similar, experiences from other countries. And I must say, like I said, the time was short, so I didn't go into that very much.
Very
But
much.
I
Okay.
know places like South Africa, they also have some stringent, rules around FX. This is based on empirical evidence. When you go to SA you want to change dollars, etc. Unless you find some black market in some place that will deal with you at that level, in the formal setup, they will require some documentation.
Okay.
So if you have as a traveler, you need your passport. They will check your passport. They will see the stamping there, whether indeed what you are saying is true, etc. Before they engage in FX transactions with you, etc. I can't say particularly what it is for business. Like I said, it's something we need to look into. But in other places, they also have certain rules all aimed at you know strengthening the system, at least, or preventing risk of the system collapsing just because anybody comes up and says, I want
Mm.
dollars. and then you
Okay.
can have,
All
you know.
right.
And
Okay.
so, yeah, that's something we need to look
To
into.
look
But
into.
yeah,
All right. I'm also monitoring the time as well because I know you have to go very soon. And so let's try and wrap up now. But we'll talk about compliance before. Um, of course, one policy is one thing, enforcement is another. In a largely cash-driven economy like we have it, I mean informal economy like ours, how realistic is it for the Bank of Ghana to actually monitor and enforce this? Because you yourself, you mentioned that this is something that has been said in 2 years, 2 years ago. Why have we failed to actually monitor and enforce? And what are we going to do differently now to be able to deal with that? And from my checks, since the Foreign Exchange Act was introduced in 2006, it has been part of the conversation. Why have we failed till now? We're in 2025, and what can we do
mm,
differently this time?
it's a very, 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 in fact, the most difficult aspect of the whole equation,
Mm,
that we have been seeking to implement in our FX management. Okay, compliance is the most difficult part. Why? Because, like you're saying, you have a large informal, sector. A lot of these are not, they are off the radar from where, let's say, Bank of Ghana sits. What they can see, assuming they have a certain screen board, there's a large section of the market,
mm,
you know, is off their radar, and they are also influencing things out there in terms of how the exchange rate, pans out. So it's a very, very difficult thing. I think over the last few years, we have tried to use technology to, if you like, try and formalize the informal sector. Some people have indicated that, well, we shouldn't necessarily formalize the informal sector, or maybe we are uh, thinking of it wrongly, as if they all must be, block and mortar like the formal setup, the business that we have. Perhaps they should operate the way they are, and what we should attempt to do is to just find a way of capturing them in the net so we can see them. Okay, they
mm,
will still be informal, but we can see them be able to track their transactions and sort them out in terms of their needs, etc. But well, that journey has been going on. Um, I think we made some progress, in terms of using digitalization to bring some of them in there, but there's still a lot of work to do.
mm,
In Bank of Ghana also, in working with other institutions like GRA, which has tried to capture a lot of the informal businesses in their net, right, using the tax identification number, the team,
yeah.
and also automating a number of their processes. That is still an ongoing something. There's a lot of work that needs to be done there, but you can clearly see that there's a lot of work that the institution involved needs to do, and they need to collaborate in doing same. So Bank of Ghana issuing a direction out there, they will need to work with the GRA, right? Who maybe closer to the informal sector businesses, seeing the kind of business transactions they are doing, how they are raising their revenue, whether they are invoicing in USD, etc. They see that closer to Bank of Ghana. So they will need to work hand in hand to ensure they bring all these guys into the net and are able to monitor them. It won't be an easy thing.
Mm,
You also have a large segment of the FX market that is what we call black
black
market.
market. Yeah.
If you see Abuchi today, you'll not be able to tell whether it's Abuchi. Because if he's wearing his jalabia, you don't have any right to go and put your hand in his pocket. And if you see whatever it is there, you can't say he's doing a black market. There's nothing that shows. So they have the awareness.
Oh, but sometimes when you are passing, they call you.
But if they call you, unless maybe they call you and you work at Bank of Ghana and you say you want to arrest them, I don't know. But so those are very, very difficult
Mm,
things to,
to
to to deal with.
right.
I don't know whether Bank of Ghana, I mean, that would be extreme though, maybe, because when you go to the banks, right, to take dollars,
Mm,
if they give you the dollars, you see they give you a sheet which shows the code for each note. I don't know
mm.
whether you've done that before,
No,
but
I
when you go
haven't.
to the bank to take dollars,
Mm.
they will look at your documentation. When they give you the dollars, they give you a sheet, print out a sheet that contains the code for each note.
Wow.
So the Bank of Ghana is able to, monitor the banks. So sometimes even on the back of this recent directive that they issue.
Yeah.
Most recently, I went to the bank and I had to do 45 minutes. The previous when I go 15 minutes, by the time the certain mail has been sent to them, they give me what I need, I go. But they had
Mm.
to wait on the back of that directive, asking me several questions. I had to produce documentation upon documentation to prove what I was saying.
I see.
So clearly, Bank of Ghana has control in that regard, with the, because they regulate the banks and they have been able to set up a certain system. Maybe that system can be looked at to expand to other segments, covering maybe the forex bureaus, and to the extent that before a dollar goes out there, it can be tracked using the code system,
Mm.
right? And it goes out there on the back of proper documentation, so that even the forex bureaus, they would then account to Bank of Ghana that, okay, this is the dollars I had in stock and I've sold this much. These are the documentation that supports it, that I indeed sold it to support maybe a foreign transaction, support like a foreign travel, right? These are the documentation. But I can see it sounds like something big, and it is big. If we are willing to go that route, it will cost a lot of money to set up such a system where Bank of Ghana, at various stages can ask the actors to account for dollars that they put out there and to see whether they are really putting it in the hands of those that Bank of Ghana, expect. And that eventually is something that I think may not cut out the black market entirely. It can reduce it. It can reduce it significantly, because then, you yourself, as the one going for the dollars from abroad, you are worried as to whether
Mm.
that code has been sanctioned by Bank of Ghana.
Yeah.
Because you're worried about the notes. If something happens, you know, you may just be on the other side. But until
Mm.
you create such a system where it flows through like that, everything is coded, all the notes are codes, so that at any point in time we know the codes that are in circulation, and where you got it from can then be tracked. And if you're going to do a transaction with it, and it is noted that this code didn't come from the banks or any of the with proper documentation, then you have dollars there. It's proper tender though, but you can't spend.
You can't spend,
And
right?
then you, the one going to Abochi for it, you'll be worried. So you now go to the formal system for it. So it can be done, but it's a lot of work, and also using technology, you know, to work out the system.
Mm.
The experts can look
I
at.
wanted to ask about that, whether we could use technology and what kind of technology, but because of our time, we would let that slide. Let's end on solutions. What should or what immediate practical steps should businesses take now to stay compliant without losing their competitiveness?
And so I talked about minimizing the risks using their contracts,
Mm.
right? So if you feel that reconfiguring your pricing in CD terms, looking at your cost, will put you in a situation where several months you are going to incur additional costs that you will not be able to pass on to the consumer, then you would have to find a way to put in your contract, certain payment terms, for instance, that will ensure that if customers are not paying immediately, then the additional costs that will come as a result of, at least you'll be able to pass on some to them, or be able to pass all to them. Okay. So you
Mm.
can use your contracts, and contracts doesn't have to be something big. It could be the way you even do your invoicing, where you include, certain notes, so that the customer is clear that if you are paying immediately, this is what is applicable. But if you have to pay in the next month or two, you would have to reconfigure certain things based on the prevailing rate, so that so they can look at businesses can look at in reconfiguring their system. They can look at some of these approaches to minimize the impact. But overall, the rules are rules. They are meant to support the entire ecosystem. So
Mm.
they should feel the short-term pinch and look forward to a more healthy ecosystem in the medium to long term.
Mm. Right. Okay. And then it's finally just before we go. So if implementation falters, if we're unable to do it well, what risk are we staring at down the line?
Of course, if implementation falters, of course, the same thing we are trying to prevent is what will fall out. So depreciation of the local currency, also some directives, right?
Mm.
So it's already probably creating a certain panic, although it's well intended, right, is already creating a certain panic. There are people that are now looking for opportunities to hold dollars because they see Bank of Ghana is beginning to be overly stringent with, having access to dollars. So the natural reaction will be, well, if I find dollars now, me, I'll hold it and keep it.
Okay.
The system to give me. So if Bank of Ghana doesn't have an effective way to monitor that, then of course, it's going to spiral into this sort of, situation, which is going to be dire for us. Implementation is everything. We must find a way at least to, make sure we are able to implement these rules.
Right. Okay. Dennis, thank you very much for your time. Really, really grateful this morning to have had you share your insights with us. Thank you so much.
Thank you. Thank
All
you
right.
to your
Please do it.
US too.
All right. All right. Great. Okay. So that was Dennis Brown. Dennis Brown is the associate director. He's an associate director of strategy and transactions at Deloitte, and he joined me this morning for this all-important conversation on the crackdown by the Bank of Ghana.